Hello, and welcome to Personal Property Tax Return Preparation. I'm Jim Wyatt, and in this video, I'm going to walk you through the process of filing the Personal Property Tax Form, also called Form OR-CPPR. With only a few exceptions, every business in Oregon has to file personal property tax returns, which in Oregon is called the Confidential Personal Property Return, Form OR-CPPR. If you are a not-for-profit and believe you may be exempt, contact your county assessor office directly and speak to their waiver specialist for instructions on applying for a waiver. All personal property is valued at 100% of its real market value unless it is exempt. Property is taxable in the county where it is located, and a separate return must be completed for each physical location in which you have personal property, including storage units. If your tax assessor assesses your property below a certain value determined each year, you will not receive a tax bill. As an example, the 2019 minimum assessed value for taxation was $18,500. For 2020, this value won't be determined until March of 2020, and the forms you use may well be incorrect in what they have printed as the minimum value. However, even if the value of your property falls below this minimum, you are still required to file a return by the deadline or be charged a failure to file penalty. Even if you think you don't have any property to report, reevaluate. Ask yourself the following questions. Do I have telephone expenses? If so, you have a telephone system. Do I have computer expenses? If so, you must own a computer. Do I have office expenses? If so, you must have pens, paper, and other supplies that need to be listed. The term personal property is somewhat misleading. It's a legal term that helps distinguish property such as furniture and equipment from real property such as land and buildings. Although it's called personal for reporting purposes, it is only equipment, furnishings, etc. that are used in your business. Here is Oregon's definition of reportable property. Quote, taxable personal property includes machinery, equipment, and furniture used previously or presently in your business, including any property not currently being used, placed in storage, held for sale, expensed items, or items fully depreciated by federal standards, unquote. Pretty much anything you see when you look around in your office, shop, or other place of business is included. The Lane County position is that all businesses have reportable property, even if you're using the owner's personal laptop and no other type of equipment. There are some important gems or nuances in this definition worth looking closely at. Quote, used previously or presently, unquote. It doesn't matter if the equipment, etc. is still being used. Maybe it's obsolete and not efficient to use, like an old telephone system put away in the back office. Maybe it's broken like a computer and you just haven't sent it for recycling. If it is on your property or in your storage, or you are about to sell it, it must still be reported. Quote, expensed items or items fully depreciated by federal standards, unquote. This means do not think of the property in terms of fixed assets and depreciation. Those property concepts are important in keeping books, producing financial, and preparing income tax returns. But they are not guiding in preparing the list for the personal property tax return. In federal depreciation, your property can reach a $0 book value. This does not happen in personal property taxation. They reach a minimum value, usually on the 5th year of ownership, which continues on as long as you possess them. If you want to see the depreciation schedule used in personal property tax, go to the Department of Revenue website and do a search for the current year table. The state sets the depreciation rate, and it can vary from year to year. Personal property reported is property of a durable nature, regardless of age and value. So, yes, unfortunately, a stapler is reportable. However, as you will see, there are what we call buckets of certain property types, such as office supplies, which do not require itemization. Thank goodness. Some good news. There are some types of property that are exempt from reporting. Here is a list of all of the exempt property. Intangible personal property, such as money held at interest, bonds, notes, shares of stock, business records, surveys and designs, materials the data is recorded on, such as paper, tape, or film. Computer software that is not integrated in equipment. It was bundled. Household good, furniture, tools, and equipment exclusively used for truly personal use in and around your home. Inventory held for resale, and this is different from property that you have decided to no longer use and discard if you are discarding by selling. Livestock. Licensed vehicles and equipment other than fixed load and mobile equipment. We will look at this equipment later when we go over step-by-step preparation of the PPT return. Farm machinery and equipment primarily used in preparation of land, such as planting, raising, cultivating, or harvesting farm crops, or feeding, breeding, management, and sale of livestock, poultry, fur-bearing animals, bees, dairies, agricultural or horticultural use. Certain logging equipment, which we will discuss later. The personal property tax return has a unique filing period. You need to report all property in your possession as of 1 a.m. of January 1st in the current year. For example, whereas you file your 2019 income tax return by April 15th of 2020, you file your 2020 personal property tax return in the spring of 2020. Please note that if you have purchased equipment, etc., and it is in transit on the first day of January, you should still report it at the location it will be delivered. You have paid for it, and it is your property. You will be asked for the cost when purchased. This cost includes more than the purchase price. It should also include the delivery and freight charges, as well as the installation costs. If you have the property, but have not installed it yet, you must include an estimated installation cost. The deadline has changed in recent years to March 15th, but you should check each year to see if it has changed again. And contrary to your income tax return, there are no extensions allowed. There used to be, so it's worth repeating. Currently, there are no extensions on the filing deadline granted in Oregon. Many other states have the same deadline, but many do not. Check each jurisdiction you have property in. In Oregon, counties differ as to whether they must receive the return by the deadline or whether the postmark needs to be by the deadline, so check each jurisdiction. Please contact your local tax assessor for your county to find out where to send the return. Again, each county has just one assessor's office. Next, let's take a look at the actual form. Please go to the following web address. This is a fillable form to be used during your first filing only. The county will send you a partially filled out form with your address and account number each year thereafter, and it may have a barcode specific to your account, so you won't want to use this generic form after the first filing. Please notice that in the web address, you can see the year. When you are ready to prepare the next year, in the following January, please change the year in the address to the correct filing year. This is last year's form. Oregon uses different colors each year. The front page includes information about your business that you want to fill out and Schedule 1. As a first-time filer, please write, quote, new account, unquote, in the account number field and leave the code area blank. Those fields will be assigned to you by the tax assessor this first year. And as noted earlier, the county will send copies of subsequent years' forms with this information pre-filled. The large empty space below the account number is for the address of your business's central office. It might not be in the county you are reporting to, but it is where you would like all your notices and returns sent to you in the future. The physical location for the return you are completing is just below this area and says, quote, personal property location, street address, etc., unquote. The date business originated in the county field, this may not be the same date as your business was incorporated or legally began. It is county specific and means when did you start business in that county. It may not even be the date for the location you are reporting. Maybe you have several locations in the county, or perhaps this was not the original location in the county. Fill out or check all the remaining fields that apply to you. On your first filing for a location, you must not check the second box called if your total assessed value was below $17,000 last year, see general information number 2. The tax assessor will assess your property, and if you don't receive a bill in the same year, you can check this box in your second filing year. Each year, this value will change, and it may likely increase. There are a couple of interesting fields and check marks that you need to pay attention to. Please look just above Schedule 1. If you have multiple locations within the same county, you will need to check the box and fill out this section of the form for each location separately. If you do have multiple locations within Oregon, you will need to fill out a separate return form and send it to the tax assessor for that specific county. So as an example, if my company has 3 locations in Lane County, I complete 3 returns and send them to the Lane County tax assessor. The next checkbox is if you had a logging equipment exemption in the previous year. Well, as a first-time filer, this does not apply to you. However, with this first filing, you can file Form 150-310-026 titled Environmentally Sensitive Logging Equipment Qualification with this return to determine if your equipment may qualify for exemption. This form needs to be filed every year. We will discuss this form in more detail towards the end of this tutorial. Okay, so now let's look at each schedule. Schedule 1 is at the bottom of page 1. Schedule 1 reports all leased or rented property. Do you have a copy machine that you rented monthly? Yes, then please list it here. Do you lease your phone system? Again, list it here. These are just a few examples. Please fill out all the columns. Your invoice should tell you who pays the tax for your leased property. If not, you can always call the lessor. If you are the party leasing, the lessee, do not fill in box 10, the owner's opinion of the real market value. If you have more than 3 such leased or rented items, place all the items on an attachment, write See Attachment in the first blank box in number 1 column, and check the Separate Attachments box at the bottom. If no such property is owned or leased, enter None in the first box, number 1. Let's move on to the second page into Schedule 2. Schedule 2 reports all your supplies that are not part of the manufacturing process. General office supplies are items such as copy paper, envelopes, pens, stationery, and similar items. Maintenance supplies are cleaning supplies or axle grease, just to name a few. Under operating supplies include paper cups, straws, garbage bags, and gasoline. Spare parts are repair parts, computer parts, etc. In the last column, you can list the value of any items you didn't cover in the other categories. Total the amount and enter the amount under Schedule 2 Total. You don't have to inventory these items unless the items are high dollar items. An example would be that you have spare parts that are high dollar and that you inventory so that they are available when needed. The acceptable method for determining the value of items you are not inventorying is to look at your purchases over a 12-month period for office supplies, operational supplies, etc., and divide the category total by 12 months. The county will accept that the value of your ending inventory is equal to the average monthly purchases of those items. Schedule 3 is for floating properties such as floating homes, docks, and boathouses that are not personal licensed boats for personal use. The questions and information requested are self-explanatory. If you do not have any property of this type, write none under the Schedule 3 total box. If you have several items of each property, list them on a separate attachment titled Schedule 3 Floating Property. Be sure to list all of the information required. Write See Attachment in the registration number box, and be sure to check the box that states there isn't an attachment. Do you have a professional library? Professional libraries are books, electronic media, CDs, tapes, videos for accountants, architects, attorneys, consultants, doctors, any science professionals, surveyors, and title companies, as well as electronic, mechanical, or other technical professionals, and they are reported under Schedule 4. A subscription service to an online reference library is not listed. If you have more than one book or set of books, the items should be listed on a separate page, and you should place See Attachment in the first box. In a multi-book set, list how many you actually have, not how many the set originally had. List the original costs, but also be sure to list your opinion of the real market value as of January 1st. There is an exception to listing your opinion of value, and that is in the area of a law library. You can find the fair market value of law books on the Oregon Department of Revenue website, as determined by the Oregon Department of Revenue in cooperation with the Oregon State Bar Association. If you do not have a professional library, write none in the first box. The last schedule is Schedule 5. Schedule 5A is for all other taxable property, and Schedule 5B is for small hand tools. Usually Schedule 5A contains the most information on the return and requires the most detailed item list. Please take a look at the last page of the form's instructions. Here is an incomplete list of properties that fall under this schedule. This is worth repeating. Although extensive, this list specifically states that it is not complete. We'd like to point out a few items that are typically overlooked, such as calculators, desks, refrigerators, sound equipment, and walk-in coolers. On the right side of the last page is a list of fixed load and mobile equipment we discussed earlier that although they may be licensed, they are not tax exempt and they do need to be reported on your PPT. Undoubtedly, you will need to list the items in 5A on a separate sheet of paper as an attachment. Title it Schedule 5A, All Other Taxable Property. Write See Attachment in the first box under Item of Property, and be sure to check the box at the bottom of Schedule 5 that states there is an attachment. When itemizing your property here, be very specific and do not lump items together. As an example, do not list, quote, reception room furnishings, unquote, or conference room table and chairs with the total value. Break out the different components and their respective values. There are a number of reasons for specificity. Number one, in the future, a member of the listed group, the chair or a lamp, is likely to be broken or placed elsewhere in your office or moved to another location. How do you account for the change in value years after the purchase was made? Number two, you may be randomly selected to have your return audited, and an inspector will schedule an on-site visit. When they look at your list and see non-itemized groups, such as employee kitchen equipment, they won't know what you included that year and what has changed. Number three, itemized lists although initially more time consuming to assemble, allow for an annual staff review more easily, especially if office staff changes. The itemized list is used as a checklist for completing subsequent returns quickly and accurately. Now let's discuss one of the Schedule 5A areas that can be most difficult to determine: leasehold improvements. For an example, let's say you rent a building and you add partitions, etc., to break up the office space into smaller units, and you add a sign outside the office with your business name. The partitions are mostly permanent in nature, or what we term affixed to the building. The general rule is that anything that is affixed, or part of the real estate, the building or the land, is not taxable personal property. However, the more definitive rule is that you are required by the landlord to remove the improvement when you vacate, or if you have the option to remove the improvement, it should be considered taxable personal property. So in our example, if the landlord says, sure, install the partitions, but when you leave the building, it must be returned to the way it was, then those partitions are taxable personal property to you. The sign will almost undoubtedly be removed. It was customized to your business name. It is included in your personal property list. If in doubt, it's best to include the property with a note, and the county assessor will evaluate how it should be treated. Schedule 5B is what we call a bucket item. You don't have to list these small value items individually. They are the collective value of your small hand tools. Here, though, be sure to indicate the type of business you have by checking the appropriate box. Note there is an quote other unquote box. Also, check the box which indicates who owns the tools. Is it the company/business owner, or is it the employee? If it is the employee, please list the employee's contact information. If you store employees' tools and don't indicate that they're here, you may find that if you have a physical audit and the auditor sees the tools, they'll add them to your taxable list. If you have no small hand tools, enter none in the first box under owner's opinion of real market value. Remember, the signature line for this return is not on the last page, but on the first page, under the taxpayer's declaration. It is very important that the person responsible for the return sign in the taxpayer's declaration. Otherwise, the return is considered invalid, and in the event that you are not notified by the county and able to correct it before the deadline, you will be late in filing. At the bottom of the taxpayer's declaration, be sure to mark your type of business entity. You also need to prepare a list with all the names and addresses of each individual partner for a corporation, an LLC, an LLP, and partnerships. The list needs to be attached to the return when you submit the return. It should be reviewed each subsequent year and updated if necessary. Remember, this return doesn't allow any extension. The late filing penalty is 5% of the tax owed if you file between March 15th and before June 1st. If you file between June 1st and before August 1st, the penalty increases to 25%. And after August 1st, the penalty is 50% of the taxes owed. Counties vary as to whether the postmark is the date of submittal or the receipt date in their office is controlling. Check with each county that you are filing with. And please remember, some areas such as Eugene send their mail to Portland for postmarking. The day you drop your mail off may not be the day it is postmarked. You will receive a tax statement showing the value of your property and the tax that is due around the end of October. Please keep a copy of your return for your records. Toward the end of the year, the tax assessor will send you a new personal property tax form for the following year with all of your information you provided, your account number and code area, and a list of assets you reported for the last year. When you send the return in, make sure you include the form signed and dated, the list of names and partners, and all additional attachments. Remember to verify that you check the attachment boxes that are applicable. Congratulations, you completed your first personal property tax return. After you file your first return, the tax assessor will send you the next year's form and an attachment that lists all the information you provided previously. However, it will not include the list of shareholders or partners. You will likely receive this form in late December or early January. Check all the pre-filled information for accuracy. Items for Schedule 1 and 2 will appear as part of the attached list of property you receive. On the first page, fill out the date the business originated and the type of business. Check that you filed last year and indicate the county. Or if the business was closed or sold or moved out of the county, provide the new owner's name and address if appropriate. If the business moved to a new location outside of the original county, you'll have to file a first-time filer return in that new county, as well as a closing return in the former location. To file a closing return in these circumstances, complete the date information for the move out of the original county, and on the attached property list, mark all of the property that transferred to the new location with a note listing the new location's address. Check to see if logging exemptions apply to you. Write either See Attachment or None in the first line of each schedule. Follow the instructions for the first time's filer to complete Schedule 2, Non-Inventory Supplies, if the values have changed from the previous year. If so, be sure to find the lines for these items on the attached property list sent by the county and draw a line through them and write Delete. As mentioned above, the tax assessor provides you with a separate attachment that lists all your property you declared last year. If you are unclear on what needs to be reported, please refer to the first-time filer instructions earlier. If you sold or disposed of a property, neatly draw a line through the property on the attachment and write how it was disposed, such as sold or discarded. And if sold, the dollar value you received. It is often helpful to write the disposal date. Use the additions list, purchased during calendar year attachment to list new property, or check on the same attachment if no changes were made. One very important note: the same deadlines, penalties, etc. apply to subsequent years as for the first-time filers. Congratulations, you've completed your annual personal property tax return. All right, that wraps up our tutorial on preparing your personal property tax form. Be sure to watch our other tutorial videos on Forms 1099 and the year-end accounting checklist. Thanks for watching.